Welcome to our video on the top 5 Forex trading indicators every trader should know. Technical indicators can be a powerful tool for Forex traders, helping to identify trends, momentum, and potential entry and exit points. In this video, we will introduce you to the top 5 Forex trading indicators that you can use to improve your trading strategies. First indicator that we are going to talk about is moving averages. Moving averages are one of the most popular and widely used Forex trading indicators. They help to smooth out price action and provide a visual representation of the trend. Traders can use moving averages to identify support and resistance levels, as well as potential entry and exit points. Second indicator is Relative Strength Index, RSI. The RSI is a momentum oscillator that measures the speed and change of price movements. It oscillates between 0 and 100 and can be used to identify overbought and oversold conditions in the market. Traders can use the RSI to confirm trends, as well as potential entry and exit points. Next one is Fibonacci retracement. Fibonacci retracement is a technical analysis tool used to identify potential support and resistance levels. The tool is based on the idea that markets will retrace a predictable portion of a move, after which they will continue to move in the original direction. Fibonacci retracement levels can be used to identify potential entry and exit points. Let's talk about Bollinger Bands. Bollinger Bands are a volatility indicator that can help traders identify potential breakouts and trend reversals. They consist of 3 lines, with the middle line representing a simple moving average, and the upper and lower bands representing the standard deviation of the price from the moving average. When the bands contract, it can indicate low volatility and potential for a breakout, while when they expand, it can indicate high volatility and potential for a trend reversal. Finally, we will talk about MACD. The MACD, Moving Average Convergence Divergence, is a trend-following momentum indicator that shows the relationship between two moving averages. Traders can use the MACD to identify potential trend changes, as well as potential entry and exit points. So there you have it, the top 5 Forex trading indicators every trader should know. While these indicators can be powerful tools, it's important to remember that no single indicator can provide a complete picture of the market. By using a combination of these indicators and other analysis techniques, you can develop a comprehensive trading strategy that works for you. Don't forget to like this video and subscribe to our channel for more Forex trading tips and strategies.